The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more do we go into the breach, dear friends.
The following takes place between 2 p.m. and 3 p.m.
And what do we have going on today? Well, we're up 2 after we've been up 12 on the S&P. Dow's up 65. NASDAQ's up 13 after being up 50. And the Russell is off about 4. I suspect that we've got a downturn, which is pretty rare during options expiration. You need a lot of evidence to go short during this period of time. But I think I've got that. We're talking about our options expiration plays in the webinar on Wednesday night. We concluded another profitable, obscenely profitable options position today. We'll talk about that in a few minutes. You still have time to go sign up. We added a new position this morning that I think was kind of a gift. I probably wouldn't have gone for it other than it just seemed too pretty to pass up. Handful of other ones. I wanted to get to one this morning. It opened up lower, but we did find another one, so that was nice. So we'll talk about a few of these, or at least this one that we did, and we're going to dissect it come Wednesday night, put all the pieces together, let you understand that there's a lot more to what I do than that. Okay, got a couple of emails already to start the show. You can always give me a call at 877-927-6648. You can email me at path@tfnn.com and put a message in the den. So what else is going on here? Well, options expiration on Friday. Then we go into a very light week next week going into Memorial Day. I suspect that we've started a pullback that could bring us back to 2650. Now, each day I'm going to get more information, and that more information I'll bring to you the next day. But right now, I would say all things being equal, it kind of looks like that 2650, maybe 2670, which isn't the end of the world. But we could probably pull back to 2600, I think, by Memorial Day weekend. And if you're a bull, this is exactly what you would want to do, because volume's going to shrink, the market's going to pull back, and then you have a setup for a summer rally, possibly. Now, if volume increases, then you're going lower, but you know what? This time of year, volume tends to very much decrease, not increase. And that means that it's kind of hard to shove shorts off the market. In fact, they'll probably short a little bit too much. But that generally sets up a market where everybody's way too short after they come back into June. And, of course, then you hit, the first couple of days of June into fund buying. And we could see, we might be in this range for a while. But we'll see. You got to play it by ear. You can't get married to any position too much these days. But I like the setups. We're going to be looking for more option positions to play. I got out of our last long-term position today in the Tech Insider, and I'm going to think about buying back in June. It just doesn't seem like there's enough to drive us higher, and not a lot of horrible stuff happening in the economy to drive us lower. But I could see that without being able to break out higher and having more volume, the chances are that we are going to have kind of a nice light pullback in a lot of these. And if they're very frothy, like the one we're going to talk about today, you could see some huge moves all in one day. And it tends to kind of happen in these markets with light volume. So we'll be doing that. What else are we talking about? Let's see. Good afternoon. Okay. See if there's anything else out here. We've got a couple. And okay. Anything else here? Don't think so. Let's get to a little bit of history, and then we'll get to charts in the next segment.
Then it's all just a little bit of history repeating.
On this day in 1973, Skylab, America's first space station, which it was not, is successfully launched into orbit around the Earth. 11 days later, U.S. astronauts Charles Conrad, Joseph Kerwin, and Paul Weitz make a rendezvous with Skylab, repairing the jammed solar panel, conducting scientific experiments during the 28-day stay aboard the space station. Of course, it wasn't the first space station. We had a thing called the Manned Orbiting Laboratory that didn't talked about much. It was one of the Cold War projects. It was the first space station. And this program was actually canceled, I think, like a month before the moon landing, if I'm not mistaken. There were 17 of these astronauts. No telling how many times these guys went up and circled the globe. And they will never, well, maybe not never, but may not ever get their just dues while they're alive. There's a couple of them that have talked on a very broad scale about what was going on. None of them ever talked about actually going up there, but they went up there in little Gemini capsules, otherwise known as spam in a can. And it was one giant floating photographic studio for Russia is basically what it was. I think everybody knew about it, at least the Russians did. They would take pictures, stay up there for 30 days, take pictures, and shoot them out of a hole for them to be picked up by a prop airplane that was flying along. And that was one of the jobs that came by my dad while we lived in Hawaii. He flew U-2s. He also flew one of those big things that you saw in James Bond that picked him up at the end of the movie, where they put the balloon up. They had the same thing, but it was attached to basically a big film canister that they come back and get. But he did that for a while. I think he did that when he wasn't going out flying through clouds of nuclear debris. But on this day in 1973, America's first space station is successfully launched. Of course, on July 11th, 1979, it came back down, raining bits and pieces on Australia and into the Indian Ocean. Anyway, when we get back, we'll start looking at some charts. We'll talk about my latest options play, how we played it and why we played it. And then we'll get on to a lot of other charts and look at some other stuff going on. And we will look, because that's what it's all about. Options expiration. There are the quick and the dead.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Yes, we're talking about Dudette in the Tiger's Den. The options queen is what they're calling her. Anyway, for our options play, we got some good wood on the ball, and what we did was go and buy Friday and this morning the 170 puts on Red Hat. I'd been watching this one for 4 days, I think, and I knew that we were getting very close, started to see exactly what I wanted to see, which is the light volume on Friday. They took another stab at it this morning. I put half my puts on Friday toward the close, and the other half this morning. So I think I was in at $1.10 or $1.15 for an average. I'll have to go back and look. Anyway, went down to 165, which is our target because it's options expiration. The weekly options were fairly cheap, so we turned $1.15 into $5 or better, and in just a handful of days. Now, there are a few things that go together in putting these things, these trades together, and it's probably going to take us a good hour on Wednesday night to explore all of them. Some of them are things that I do. Some of them are things that are just basic chart reading, but a lot of them are statistical, and I hate when people tell me, well, where's the S&P going to expire exactly? It is a statistical operation, and it kind of has a bell curve. We're going to talk to you on Wednesday night how to put that bell curve on top of the expiration. Also, anybody just getting my newsletter shouldn't expect 400, 500% winners every single day. There's about 3 or 4 times a year when the market lines up and does everything you need it at the right time, where you can go in and buy options at low prices and turn them into riches overnight. That does not happen every day. But I'm going to say from when we went long NVIDIA down at 211 and rode it up, the market's been acting incredibly correctly, i.e. volume, price movements, retracements. The market's acting a lot more like it used to before QE. Every day it seems to be a little bit more than that. And we get the signals that used to work so well in the 2000s and even in the late 1990s, since I started doing this in 1998, work well. Now, I've had, since Christmas of 2004, my first article in Stocks and Commodities on options and using this method. But a lot of people say, well, Max Payne says this. Well, I'm going to tell you that Max Payne is about 1/4 of the story. And we've got, I don't know, I've got some 500 examples I need to go through to finish and get ready for the webinar on Wednesday night. But there's a lot of reasons to do some different things. Now, I was talking to one of my other subscribers today, and I said that one of two things really needs to happen for the market to start heading down and fairly strongly. That is, one, that we lose Apple, and anything under about 187.50, if we start hitting that number, my guess is we're going to start seeing some sellers run to the door before the long 3-day weekend. That would be one thing. The other thing would be crude. Now, that's been holding up fairly well today. Hadn't done a lot. But one or both of those certainly could see some significant pullbacks. Apple by itself can croak the market, or at least the NASDAQ. I kind of leaning more toward that and making plays off of Apple, not going for Apple itself. Apple's options expiration does look rather bleak. Could see down to 180. And you can do the back of the envelope calculation on what that would do to the market. I don't think that the rest of the market tends to look that badly. I just suspect that a lot of the gains that we've had in the indexes were kind of related to crude. And any kind of weakness in crude, any kind of weakness in Apple makes these markets, which are rather thin, probably come back and get the froth off the market. Again, I'm not looking for the end of the world. I'm not a real end of the world kind of guy. And volume, there's no signal out here that says volume is stronger to the downside than the upside. Everything says that volume will decrease in the next few weeks. And that means that we could be set up with a beautiful buying opportunity coming back from Memorial Day. So right now, we're looking at that, and that could be quite a nice movement. Yeah, we got Home Depot coming up this week and Walmart. Home Depot's already a little weak. I'm suspecting that Walmart may be the second gap down. We'll look at that one too. Home Depot is right at resistance on fairly light volume. Don't have a lot of indication on what this is going to do. At least options don't give me a good opportunity. You're pretty much at resistance levels though. So if you hold this, maybe you got a little bit to the upside if they report good numbers. To the downside, you're probably looking at about 182. So risk reward pretty poor for buying Home Depot into earnings. Let's take a look at Walmart too. Walmart, I've been wondering whether or not this one's going to be a 3-gap play to the downside. This could yet again gap right through this 82 level. I'm thinking of those stocks that are weaker. This one may be the weakest out here come, I think that's Thursday morning. But those two look like the ones that could kind of shove the market over the edge if Apple doesn't already or crude doesn't. But it's not like you need a whole lot to get this market kind of moving lower. Volume hadn't picked up to the upside the last couple of weeks. But again, I'm thinking, you know, if you're thinking about going long, I can't recommend it until we get some kind of signal that says that we've made some kind of better low in the markets. Okay. Is there a buy price on Walmart? I don't think so. I think literally this kind of setup in Walmart is the epitome of watching for a 3-gap play. I would not be surprised to seeing gap, get to 87 or something for earnings day and then gap back down to 80. That would not surprise me at all. And then set up for one more pop lower in this. And that could be, to me, Home Depot, I think everybody knows that housing sales a little tough. If Walmart has basically shoved all the business forward and kind of worked the books, I'm wondering if this isn't the one that gaps down. Anyway, I think it is the weakest. I have no idea what they're going to say, and that's going to be a big part of the way Walmart reacts. But what can you say? Anyway, if I thought that there was one going to gap down this week, it's Walmart. That second big gap down, because it just looks like it. It's got that smell. Ooh, that smell. Maybe our engineer can find that. Gotta have that smell. The smell that gets around you. Who was that? Leonard Skinner? I think it was. We'll be back after this.
Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to options expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Yeah, that was Leonard Skinner. Anyway, I think Walmart's got that smell, and that smells like a planet out there that begins with U. It makes kids laugh In fact, I'm wondering if any kid, after this story about the planet out there and the way it smells, hasn't quit laughing since it came out. I know if I was in high school, I would still be laughing. Facebook, it doesn't have that much smell on it. Not the same thing. Anyway, I got a couple of questions about a couple of companies. Appian Corporation, this one's got a little bit of setup for .cloud cover. You had some volume the other day. Again, 50% of your trade is the market. And I think the market is either topped out and at best goes sideways and at worst goes back down to 2650. So I don't see a lot of reasons to be getting into a market that certainly looks to me like it is getting lighter volume, not stronger. Alarm.com certainly looks like this could be going back down. Your buy point might be at 34 bucks, which is a spike down with decent volume back to the 28th of February. There's just not a big trend in this one. It's a slight trend higher. And any kind of pull lower. In fact, I had a stock that I loved, and I sold it today just because I think that we could sit there and just drip, drip, drip. Sometimes I've heard them called, maybe I've called them that. Maybe I thought somebody else called them that. Paper cut markets, where you can just drip, drip, drip. They're painful. They won't kill you, but they just don't quit bleeding. And a lot of times these light volume markets, when they get a little bearish, into 3-day weekends, especially in the summer, that's exactly what happened. You just get a little bit more, a little bit more. Everybody else sees the market going down. They go, you know what, I'll come back in June and see whether or not there's anything here. I'll go ahead and ring the register, take my cash. And we're going to go through it Wednesday night. In fact, we'll go through a couple of them before the end of the show here. Maybe in the next segment, I'll go through what the options charts look like. I've got pretty much the top 500 from the S&P 500 and the NASDAQ 100. A lot of ones in the same, or basically in both of them. But I've gone through those. I probably spent 5 hours yesterday because I wanted to make sure I was ready. I was right on the market direction. And they're all pretty much saying the same thing. Maybe we'll show a few of those here because we're going to be doing that Wednesday night. But I don't know. There's just nothing out here that makes me want to say that the market's going to rocket higher. Could we get a resolution to trade this quickly? I seriously doubt it. My guess is that the Chinese, what they will want to do is make it painful here at home for the president to try to put pressure on him. Because that's exactly what our president is doing to them. He's making it painful there. And the answer is we've had a lot of diplomats that have done nothing over the last 15 years other than sell us down the river. They're wondering whether they can't get by with that yet again. And, you know, I don't think there's going to be fair trade, but I think it certainly could be fairer. And we're probably going to get to that fairer part. And I don't think anybody thinks that we're going to get it all at once. It's going to take a number of years. But this, as they say, the longest journey starts with a single step. And that is it. So what else do we have out here? That's kind of it for that. Now, what else do we want to do? Did I answer all my emails here? Update that. Okay, somebody wanted to know what I was talking about, the one I missed this morning. That was MELI. This is the one that I thought would find some kind of bottom, and it still might down here at 300 bucks, and it hit that. But I don't see a lot, again, trying to do a counter trend bounce in this, but it doesn't look that bad. I missed it in the fact that it did everything wrong. But I was looking at this as a possible upside to play for options. This one back on the 13th of December in 2017 did 1.7 million shares. Today we got about 700,000 shares. So we're coming back to these things in light volume. This thing should have bounced today, and it didn't. which gives you kind of an indication of why I've looked at a handful of these that probably should have, and it is problematic. Now, I've got another email here. What am I thinking on Apple? Apple certainly could get back down to 180 into this candle, and maybe 185, which is this candle from the 4th of May. One of the problems is the options are fairly expensive. When I looked at them, at least this morning they were, maybe over the weekend. This candle is going to act as support. So if we pulled back, we don't have to get much under 185 before support starts coming in on Apple. What I liked was the fact that there wasn't any high volume moves higher in things like Red Hat. It basically went through like a hot knife through butter. You're not going to get that in Apple. So I'm looking for patterns, if I was going to be buying puts, to look a whole lot more. But let's say this thing does pull back to 185. That's still enough to throw a world of hurt on literally everything in technology. It doesn't have to move but $3 or $4 down, and that's it. Also, just get maybe another $1 or $2 lower in crude. That could also be enough, because both of those are fairly frothy, both the semis this morning and Apple and crude. So you don't need much out here to get the market kind of headed back lower. I guess the other question in here is, am I looking for 175 to 170? And the answer is we would have to probably get something really horrible going, some bad news, world shaking event. And unfortunately, can't really predict those because they're so rare. But, you know, could it? The answer is yes. Will it? I'd say the probability is, at least in the short term, we're probably going to find support, even if we had 2 weeks of selling around 180 on Apple. And, you know, you just need kind of a faster move out of it than I'm at here. Let's take a look at the XLI real quickly. The industrials. This one just keeps hitting its trend line on the way lower. So, in fact, I want to try this. Hey, new feature in Windows 10. So, okay. Is this what I'm looking for? This trend line down. Isn't that cool? Did anybody know that this was in the new version of Windows 10? Now I can draw on my screen. I always wanted this. I'm going to have to get a tablet now and a self-drawing screen so I can be like football commentators. Anyway, this thing's in a downtrend. You kind of hit the uptrend out here today. I think you got just about everything you want out of this. Volume's almost nothing today. When we come back, we'll look at a few options, expiration charts, so I can tell you what I'm looking at. And what else? Answer your emails, answer your questions in the den. Why don't you give me a call? This would be a good time. 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And one of the things that made it kind of hard to tell everybody what I'm doing is that I kind of do the exact same thing I did with the sector oscillator, which is, you know, you get a 9-day moving average and that's all good and well, but it's a weak learner. It by itself is, you know, over time is maybe 1.5% better than the flip of a coin, which is actually fairly decent for most indicators. But you can make that much better by putting them all together and making a oscillator out of it, like I did. So you can, they actually reinforce the strengths and get rid of the weaknesses. Not everything you can do that with, but it's kind of a wisdom of crowds approach. I've got kind of the exact same thing with options, and what I do is download these 500 stocks, the data, either on Thursday night or over the weekend, depending on how the market's setting up. And like I said, I spent like 8 hours just going through all of these to see which way everything's going. Almost all of them are showing lower. Now, there's more to reading these than just looking at where the maximum loss point is going to be. That's where Max Payne's all about, where I kind of started from. The problem is that there's about 4 patterns in here that you need to learn, and those patterns will tell you what this curve is actually telling you. If you've done options before, then you know about the volatility smile. This is kind of an equivalent to that smile in that you're trying to figure out, you know, what's going on. There's also an issue of how accurate they are, and that's where basically using a rule of thumb that I'm going to teach on Wednesday night tells you how close these things should be. And that's where you kind of get back into, you just got to have some experience with them. There's some things that I can teach. There's some things that you have to acquire from use. And I'm going to put more of these in the newsletter in the coming future. But we need to, I guess, let everybody know how to use them first. But yeah, we're going to be going through a great deal of these, and you'll get an idea. In fact, why don't we, is anybody, did we get in anything? I wanted to go and show you one. Now, one of the reasons I wanted to I thought that crude maybe was going to come down is that most of these airline stocks show slightly higher. Now, this shows about 48 on American Airlines. It was trading at 42.60 on Friday's close. Now, these things are going to converge. So maybe it gets to 45 bucks or something. So what I would like to see is some kind of setup that lets you take an out of the money call, turn it into an into the money call, like we did with Red Hat. That's where the big kind of multiplication factors are in. So you kind of have that if it would really get to 48, but most of these things are going to converge. But what I've seen is enough stuff, or enough stocks in sectors that look fairly correlated to the price of crude, and these things are showing a little higher. Crude kind of acts a little bit bubbly here, so could crude pull back $3, $4, $5? I don't think that would be anything big. I think it would just be, could it still go back higher? I think it could, but it seems to me like crude's kind of a crowded play, like Apple is, and maybe it's next week, maybe it's this week on crude, but these airline stocks, where most everything shows a little lower, these airline stocks show a little higher. So I can't say that, what the odds are, but I would say that the odds are probably better than not that we do have some pullback in crude prices, and that kind of gets maybe these airlines moving a little higher through the next few days. But you're going to need to probably see that crude move first before the airlines move. But, do these things have huge short positions? How big is that short position? How, were these things being heavily shorted in the last day or two? Because that's always a good sign that you're probably ready for a bounce. But we'll go through a great deal more of these. Okay. Okay. Everybody's laughing it up in the den. Okay, so we looked at Apple. Somebody wanted me to look at Facebook. And, you're back into this thing with light volume. I'll look at this tonight in options because I don't think I have it. But certainly, this is the kind of setup you want to be watching for quick turnarounds. Ideally, this thing would go over 190. And maybe, with light volume, you could buy the 190 puts. I'm also thinking that this one's probably still horribly short because everybody remembers all the testimony. And maybe why this thing got up here was the heavy shorts. In fact, when we look at this, again, how many times does heavily shorted stocks end up going higher, within a week or so? And here you see these little black things on the end of these red candles, and even on the blue candles too. Make them kind of look like matchsticks, except the red part actually would be reversed, wouldn't it? Anyway, it kind of looked like little matches to me, with the black part being short selling in these. You get, we don't have much in the way of short selling the last couple of days. This starts to set up the idea that maybe everybody that was short is slowly starting to get out of these positions, and that's when you get these kind of, I want to think of it as when I went skiing, and when I went to the top of the mountain, they've got these things that just look the exact same as the crests of waves coming in with surfers. It's hanging over. It won't take much just to kind of if someone just poked it, the whole thing would come down and cause an avalanche. And, is it the end of the world with Red Hat down, whatever, $5, $6, $7 today? The answer is no. But a lot of times when these stocks are up on light volume and you don't get this shorting, it's exactly what I've said, which is those are where you get the big breaks. That's where the market moves very quickly because there is nobody to step in there and start buying the stock back. So when you look at things like Red Hat, it's very important, or Facebook. It's very important to know that, last 4, 5, 6 days, people haven't been piling on these things short, because generally what they do is they'll just run it again, run it again, run it again. Everybody knows that you're short, run you out. When the shorts quit shorting, that's generally a pretty good indication that the stock or the index is probably ready to pull back a bit. Okay. Got anything else out here? Yeah, got a couple of ones. Question on the IBB. I like this above 105. You had one good day of volume today. You really need some follow through. I mean, this could be 140. Now, the question is this where this takes off? And I don't think the answer is, but I do think this could come back one more time on light volume and set up that end of the month buy, or maybe even the first couple of days of June buy in this. Not much follow through today, not much volume. Did have a nice day on Friday, though. So maybe you get started. Maybe this thing started to simmer back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to Options Expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Last question was the IWM. And you got a triple top here in the IWM. The first one was 160.63. That was January 24th with 31 million shares. Came back into it with 25 million shares, 160.30. So you didn't quite hit that high. Volume shrank 5 million shares, which is good. But again, especially in these markets, it seems like if you don't test it with half the volume, you're going to get back in there. Today 10 million shares, so maybe we're going to get in there with 15 million shares. Got in 15 million shares on the 10th. This one probably still is going to hold up better than the rest, though. So you might look elsewhere. I think this one, is it going to pull back? It is. But I think that there's probably a lot of sectors that could come off the highs a lot stronger than the IWM. It's not as susceptible to headline risk with trade wars as the rest of them, the industrials, the Dow, a lot of those other stocks, Caterpillar. In fact, let's take a look at Cat real quick. My guess, though, is that when you see these, like Caterpillar, these things keep making lower highs. Certainly looks like Caterpillar made yet another lower high, maybe today. Yeah, you kind of tested the previous low with higher volume too on May 3rd. So these industrials to me look like the weaker of the bunch, not the IWM, although it will probably pull back with the rest of them. Of course, you find the weakest to short, the ones that have the opportunity for the most downside. And this one has been under kind of on a sell for a while. You got your bounce. But I think maybe those industrials, maybe the Dow, maybe some parts of the tech sector have a lot more downside than the IWM. In the meantime, sell when you can, not when you have to. And we will see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.